Welcome, everybody. Today is the 16th of March. It is a Monday, and the markets seem to be recovering. Actually, if I'm very honest, the market is recovering a little bit too quickly for me to even get in some of my research, because for the public portfolio, I do want to share my research before I enter the position and not do it the other way around. So unfortunately for me, it looks like for some of the positions, I might have to buy at higher prices. I think the thing that all of us are wondering right now is whether or not this recovery in the markets can actually be sustained. Because if you look at it, the previous support line was around 671 in the S&P. It seems like this morning we rebounded to that line. I should turn this red now because this is resistance at 671, and then it seems like we're bouncing back down. Now that could all change. Oh my goodness, English, change, as long as the GTC events goes smoothly. We get a lot more clarity about the AI build out. We get a lot more clarity about what NVDA is doing. And I think hopefully from there we can see what direction the market takes. Of course, for now it seems like people are pretty optimistic about what is to be expected. So the S&P is up 1%, Nasdaq up 1.1%. You can see still range bound. I think nothing has changed between Friday and Monday. We are still kind of in no man's land. You can kind of say that we bounced off the 200-day moving average for the Qs, but in terms of the S&P, yeah, I would say there's a slight rebound, but I'm not too sure how strong this momentum actually is. And then but when you look at the VIX, the VIX is telling us a different story. It's down 11%. So I think definitely this is why we are seeing the markets bounce back today. All right, welcome to the stream. There's 8 of you here. Thank you for being here, even though I'm slightly later than usual today. I hope all your positions are much greener than they were on Friday. Right. For some of you asking me about the Singapore markets, I think we are in a pretty similar position. You can see that I'm using the 50-day and 200-day for the Singapore markets as well. Perhaps I should add in the 100-day. But you can see that the Singapore markets bounced off this support line over here. You can see this was one support. So here, I wouldn't call this a very strong support, but you can see this was quite a strong bounce. It came all the way down, but right now it's having problems getting past the 50-day moving average. So you can see actually markets worldwide are in a very tentative position. There might be individual positions that are up, like BMNR, which is up 11% in just one day. But like I said, because it is BMNR, I don't get necessarily worried when it's down double digit, and I also don't get too happy and too ahead of myself just because it is up double digits. Hi, Bob. Good to have you here. Right, so this is the Singapore markets right now. I think one of the reasons why Bitmine is doing well is because crypto is slowly starting to recover. Tom Lee and Fundstrat basically has said that they are seeing that the base case for them is that we are likely close to the end of the crypto winter. And what we are seeing over here is Bitcoin, for the first time in a while, seem to be reclaiming the 50-day moving average. We have to see where does this close over the next couple of hours, next couple of days. Similarly, for Ethereum, we see a break past the 50-day moving average. Now, what we want to see is that this can actually sustain at that level above the 50-day moving average. All right, gold prices are down. Today, when I was having coffee, I came across a very interesting conversation between a financial advisor and one of his clients, and his client was insisting that gold is a good trade because in the last 2 to 3 years, technically it has outperformed the S&P 500. But I think that is disregarding a lot of data that skew the results in the last couple of years, because in the last couple of years we have had the Russia-Ukraine war, and then right now we're having the US-Iran war. And I think that these two things, plus the fear of inflation, kind of spiked the price of gold. But historically, when you look at the price of gold, it seems to have lost to inflation across the last 20 over years. I love how they are slowly building how much they are buying again. I can't wait until they get. Yes, I mean, similarly, I think Right now, they are cautiously optimistic, which is why I have accumulated a bit more BMNR in the last week or so. But like I said, I have around 20K in the main account, 20-ish, 20 odd K. I wouldn't mind buying again past 24, honestly, if we do see a full recovery. But until they can get past $24, that will still be overhead resistance. If I'm not mistaken, I believe it's around $24. And I also want to see them reaccelerating. So if they're buying around 60K this week, perfectly fine with keeping my pace of, maybe 100 shares a week and things like that. Let me take a look. Bitmine. So today, basically, I want to take a look at, okay, you can see Bitmine is making their way past, that's why I remember $24. So Bitmine is slowly making their way to the 50-day moving average, which sits at around $24, right? So if we break past that and we maintain above $24, that is when perhaps you can say the momentum has really started to shift. Right now, it's really still too early to tell. Let me go on the 4-hourly to see a bit of a shorter term. What are we seeing? Okay, so on the shorter term, yeah, you are really seeing a little bit of a breakout, and I think it depends on what kind of timeline you have and how much capital you have that you might want to time your buys because you do not have unlimited capital. I am not increasing the pace of my buys too quickly just yet because you do not know what's going to happen. And I think we are still at least 2 to 3 weeks away from hearing anything about the Clarity Act. Do you know how much BMNR purchased last week? That's what we are going to be covering in today's stream. So today's stream basically uh, just came back from work and dinner. So I really haven't had chance to pull up anything. So I'll be doing everything organically on stream. I got nothing really prepped. But off the top of my head, I want to cover BMNR's movements. If I'm not mistaken, I did catch a glimpse when I was walking back home that they purchased around 61,000 Ethereum this week. Right. So maintaining the pace that they were doing last week, I didn't see their cash position. So we will be looking at that later on. Secondly, I want to compare Reddit and Zeta because as I was building out the portfolio positions and I was researching, looking at the companies that I want to add, in off the top of my head, I'm thinking of building anywhere between 5 to 7 positions in this portfolio. Oh, the cash is still 1.2 billion. Okay, if the cash is still $1.2 billion, yeah, that means they basically okay. So 61,000 ETH and $1.2 billion in cash. If that is the case, this week basically they didn't raise as much capital as they did previously. I think in the past when Bitmine hit $1 billion in cash before the Beast purchase or the Mr. Beast investment, sorry, they actually kept steady at $1 billion in cash for quite a number of weeks, which is why all along in my projections, when I was projecting out future valuations of Bitmine, I always assumed that they had around $1 billion in cash. Right? So if you are asking me, what do you think the price of the stock would be in Q4 for BMNR? It might be a cop out to say higher than it is today. I really don't know. If I knew, I wouldn't need to be, over here. I can be sitting in a holiday villa somewhere around the other side of the world. Yeah, but I'm here looking at the markets because I don't know. Right? I think if you ask me and I had to put money on it, which I am putting money on it, I would say higher than it is today. Um, but I am not surprised. If you listen to Tom Lee's macro thesis, is that March will be a strong month. But we're going to see volatility in the middle of the year due to seasonality. We have, I mean, the S&P, if you look at it on a weekly time frame, the returns have been fairly ridiculous. You can see, and every time we seem to, at some point in time, come down and kiss the 200-day moving average. Could this be the time? I feel like the markets are very tentative. You are just waiting for that one pin to drop, and this could come all the way down. Now, I think that is what a lot of people are projecting. And the funny thing about the markets or the contrarian bet is that since everybody is expecting a dip, perhaps there is no dip, right? We never really know for sure. This could be just one of these little dips that you see down to the 50-week moving average. But at the end of the day, if you ask me, I think once we get clarity after the midterms, then I think we do see I do see a scenario where ETH recovers to the $3,000 to $4,000 range, and then Bitmine recovers accordingly. I think previously, a couple of weeks ago, I did these projections where I actually showed you different price of Ethereum and resulting in a different price of Bitmine depending on how fast they accumulate Ethereum. So you pay for Fundstrat research. So I think Tom Lee, the way I listen to Tom Lee, it's the same way I listen to Elon Musk. He's just telling me what he's going to do in future. Whatever timeline he gives, I take it with more than a grain of salt. Yeah, really. So that's how I think about his research. Directionally, he's right. Sometimes because he's still a fund manager trying to sell his fund, I guess, he has to paint a little bit more bullish picture. I mean, he will market it to you as, I'm helping my investors stay calm and things like that so that they can hold through the markets. I mean, he can do whatever he wants, but as an investor that is managing my own portfolio based on his actually not based on his research, using his research as one of the source that informs what I do. I take from him the direction of the macro thesis of both Ethereum as well as the crypto economy. But at the same time, I apply a large grain of salt when it comes to his timelines. So I have my own timeline for Ethereum. And for me, if Ethereum recovers to $4,000 by 2028, perfectly fine. Because I'll be selling calls on that position over time, selling puts, and then just rolling along the way across the next 2 years. So I'm personally not too affected by it. Why is SoFi struggling so much? Well, I think they are being caught up right now in the private credit space. Everything in the finance sector is being hit. And sometimes when these kind of things happen in the finance sector, all the companies get hit indiscriminately. That's a lesson that I have learned with Tom. I think we all, yeah. So you know what? I learned that lesson from Elon, and then after that, I realized very quickly that Tom Lee was a cut from the same cloth, basically. So applying the same kind of principles to his thesis. I mean, by and large, I think you can say that directionally, Elon has been right on Tesla, but I think his timelines really are out of whack. I think same thing for Tom Lee. Can I see 22,000 Ethereum? Yes, I'm pretty sure we will eventually see that if payment rails come on chain, but there are a lot of ifs, ands, and buts from now until $22,000 Ethereum. Right? I don't think this is something that we're going to see in the next 2 to 3 years. So I am someone that is fundamentally driven, which is why although Tom Lee says that we should use the value of ETH to Bitcoin as a way to value Ethereum, I tend to still look more at the total value lock on chain, the usage, the transactions, the amount of Ethereum has on exchanges, because I think all these fundamentals are the drivers of what is going to cause that ratio to rise. So there's no point saying it should be 0.8 or 0.1 ETH to BTC ratio. Yes, it should be, but what is going to get it there? So you can't value it, to me, if you ask me, just solely based on the ETH to BTC ratio. I think that is a good guide for where it could get to, but to use it and say that it should be here, therefore this is undervalued, that's not how the way I look at companies. I need to see what are the things that are going to drive Ethereum to that 0.1, 0.2 level. Would you sell Nebius today to buy more hymns? My goodness, this is a heartbreaker. I think for those of you who are following me for the past 2 weeks when I've been opening this, since the 2nd of March, last 2 weeks, yes, since I've been talking about this portfolio, I have debated for a very long time between Iran and Nebius. Like I said, Nebius will be in my main portfolio because the price per share is a little bit too high. I know today they signed a $12 billion deal with Meta, with an option for them to, is it an option or must they purchase an extra $15 billion more? I really like Nebius for, I mean, maybe this is something I'll cover later, but high level, I like Nebius for the way that they have their revenues diversified between 2 of the hyperscalers, because Iran only has that $10 billion contract with Microsoft. With Nebius, you get Microsoft and Meta multi-billion-dollar contracts. So I feel a lot safer there. I understand the whole argument about Iran being, a full stack data center build out. They own the land, they own everything. And I believe they are having a big, I think at least right now, they are aiming to build up 4.5 gigawatts Iran. So, um, yeah, I think it remains to be seen whether or not uh, Iran can announce more deals. There's no use having so much data center or so much power if you don't have the deals to supplement it. Because right now, my concern with Iran and the reason why I have held off selling puts on the company over something like Zeta is because yes, they have the $10 billion deal from Microsoft, but everyone else running on their data center tends to be the smallest AI startup names. And I don't know how sustainable that is. So, long answer short, would I sell Nebius to buy more hymns? I would actually, usually, I would be a bit inclined to like sell something, not sell completely, but trim a bit of my high momentum to move to the low momentum companies. But I think if you watch my previous video, my light just died. If you watch my previous video on hymns, I think one of the concerns I have is that I'm not super in tune with the healthcare sector compared to tech, AI, and finance. And so because of that, when news comes out, okay, Hims and Novo Nordisk breaks up, Hims falls. Suddenly they're back together again. Stock rises. It's nothing fundamental. It's very news driven, and I don't know how the regulation in this area will play out. Because of that, I would rather limit my exposure to Hims, which is why I haven't really been buying as much compared to other companies. Now, unfortunately, I haven't opened a position in Nebius before today's announcement. And I think one of the things which I have to wrap my head around, and I know there's a lot of research out there, I just haven't really gotten around to it, is the fact that right now there's a need for companies like Iran, there's a need for companies like Nebius because of the demands for data center. But because AI, we are just in the infancy of AI, and right now we are moving into the inference segment of AI or building out the inference. And I think my concern is that what if one day, and I think we all know this, people who have invested in NVIDIA, you also know this, one day the build out, maybe not today, maybe not in 27, I would think maybe in 28, 29, we will see that the pace of the build out starts to moderate. Right now, you can see all the hyperscalers are really building out their AI infrastructure. And my concern for a company like Nebius is that what if this build out eventually moderates? They already have their own in-house capacity to support the demand, and over time they may move off these third-party data centers. Then, in that scenario, will the smaller companies at that point in time be able to make up the revenue that some of these companies are getting from the bigger hyperscalers? Now, a lot of these contracts are 3 to 5 year contracts, so technically they are safe for the next 5 years. Beyond that, I don't know. So it would, companies like Nebius, Iran would make a good medium term trade, I would say, right, in the next 3 to 5 years as they recognize more and more of this revenue. But again, like with Iran, we are not seeing any new announcement beyond that $10 billion Microsoft deal. I think Navitas with semiconductors maybe that's something I'll have to look at as well. I haven't really like I said, I last year because for me when I have my portfolio, I'll allocate percentage into different sectors. For me, the sector that I'm most comfortable with is actually finance and tech. Semiconductors and hardware really is not something I have looked deeply into, which is why I say last year a lot of my position was actually in SoFi, in Google, and AMD. Right, I think if you have followed the my top couple of picks for last year, that was my position. AMD is actually the smallest of the three positions, and the reason for that uh, is that because of the three, I feel like my knowledge in the semiconductor is something that I still need to develop. So right now, I understand how the semiconductor is made, which is why I started to look at the other processes within the semiconductor industry. But I think if you're asking me about the data centers in terms of Nebis and things like that, I still cannot answer the question: what happens when all the hyperscalers have enough power in house? What are they going to do? Because right now, a lot of them, like Iran, for example, they're just transiting from Bitcoin mining over to these AI data center revenue. Okay, so what happens when the build out finishes, the pace of capex spending is moderated, and then the hyperscalers will then try and build all these things in house, because it's the same thing with chips. Everybody is dependent on NVIDIA right now, but all of the hyperscalers, are trying to build their own chips so that they can become less dependent on NVIDIA. Similarly, when the time is right, these hyperscalers will eventually want to bring a lot of the compute in house to lower the cost. And I think that is where I don't have the answer of what next for some of these data center plays. And so I'm just wondering whether or not it's the best thing to do for now. Zelda is getting premiums from selling puts on these neo clouds. I don't believe in their long term and when capacity is met. Yeah, because I don't see a world where Google is always going to be using a third party, or Microsoft or Meta, for example, is going to use a third party forever, unless yeah. I think right now it's very easy to say that this can go on forever, but I think especially if you guys have been invested in Nvidia, we know that it is a cycle. We are just not near the end of the cycle. Doesn't mean that the cycle will never end. Hi, Chuck. Thanks for the support. Right. So today we are basically going to be talking a little bit about BMNR later on. I will compare my thesis between Reddit and Zeta. They are not similar companies. Okay, I know, but both are in the advertising space, and in the public portfolio, which is only $100,000, I do not have space for two advertising plays. Now, both of them are completely different parts of the value chain when it comes to the advertising space, but I only can buy one. So if some of you understand Reddit, perhaps you can answer some of my questions if when it comes to that. Basically, my main concern with Reddit is the slowing down of logged in users. Okay, with that, let's take a look at some of the names that we have over here before we actually get into the BMNR. So SoFi today has been bouncing around, right? You can see SoFi has dropped pretty significantly, but it seems to be hovering at this base. So if I draw a line over here, you can notice this has been a pretty solid line for a long while. We bounced quite a number of times in 24 of this $17 level, once, twice, thrice, and then now we are here again. So it was strong resistance back then. Now it should hold as strong support, right? I think most of the market can be described this way. It's a lot of very tentative kind of movements that we're seeing in prices, basically hovering around support or resistance, waiting for news to either break up or break down. Okay, so this is SoFi. Right now, we have 1,000 shares of SoFi, I believe, at around $18.10-20 something like that. Just down slightly on the position. With Amazon, we are seeing that, okay, $209. Like I said, best case scenario, range bound in between here. I can keep selling puts and calls. I am very tempted, especially because now I have, okay, I'm not sure how many of you have experienced this. I have just lowered down my Gemini subscription to the lowest tier because I do need the storage space on Google Drive. So I thought, you know what, let's just get the thing $9.90 or something, $10 per month plan on Gemini. And the reason for that is that Claude has replaced so much of my workflow. Because recently I was talking to one of my friends who was asking me how I actually look through companies and decide what to invest in. So back when I first started, and I started investing in like 2017, 2018, you manually had to look through every single earnings, right? Even during the pandemic when we were stuck at home, I still had to go in, Control F, and then look for the suppliers and try and comb through their 10K and things like that for different names that would pop up, or listen to earnings calls manually. Now you can just put the whole thing in Claude, and Claude is so accurate compared to like Gemini. I have problems with accuracy when it comes to Gemini. So every time Gemini does something, I feel like I have to double check their work. And almost every time, I do need to make some changes or change my prompt a little bit. But Claude really allows me to speak in the most natural language and get the most accurate outcomes. So because of that, I have actually changed my subscription to Claude. I mean, some of you know I have this Instagram page where it's really giving people the high level understanding of what's happening with the companies. And in that Instagram page, what happens is that usually I tend to write out quite detailedly the different aspects of my analysis so that I can present it on stream or make it into a video. But then I have to synthesize it in a very understandable way that can fit into a carousel. And basically, Claude does that at a much better, in a much better way and much more coherent way compared to Gemini. So over time, that is why I've slowly switched over to Claude. And right now, I think, I do feel that Claude is one of the better LLMs out there. Right now, so that's Amazon. Grab, I think nothing much to say over here. It's just been down. It's been ugly. Our cost basis, you can see in this yellow box over here, it's around $4.23, right? So no problems. Robinhood, you can see more or less very similar to, I think I guess you cannot say that we are really basing over here. We're basing slightly at the top, around the 74, 75 range, right? If we break down below, then we might get to 67. So I have a cash club put at around $70. We'll see what's happening. I think this is really a covered call market where, on days like this when things rebound, especially like in a bigger portfolio, I might go and sell covered calls on my BMNR and SoFi position. SoFi, perhaps not as aggressively as BMNR, but yes, I will do that. Here, you can see Zeta. This morning, it was slightly negative, I believe. Just now, when I was driving back home, I saw that it was negative, but seems like it has turned positive. RSI in the 50s, we are basically fine. Could this be a rejection and coming down over here? I think really we need to see what happens today, whether or not this bounces up from the 200-day moving average. But I think this might be an okay place to, I don't know, $18. Because right now, let me just use the Instagram to show you guys so that it's easier for me to explain. If you take a look over here, this is the portfolio. The portfolio is around $100,295, right? So this is the positions that we're having. We have 1,500 shares of Grab, right? Currently trading at around $3.80. $1,000 of SoFi, $17.93. The reason why, although the stock positions are slightly negative, the portfolio is still green is because of all of these option positions below. The income from these option positions really cushions the portfolio, right? So we have Amazon puts on 2nd of April, expiring. All my puts are expiring 2nd of April. Okay, Amazon puts $195, and Robinhood puts on Robinhood at $70, NVIDIA at 170, especially if we have a good GTC today. I'm forced to close these a little bit earlier and just buy NVIDIA depending on how the market responds. But like I said, until we are past certain major moving averages, I'm not going to be in a hurry to buy. I'm going to drip some of the capital in. And then, of course, we have Zeta, 7 cash to cap puts at around $16. And I may just start adding into this position. So I have to be a little bit careful with how I allocate my cash because I have to remember I only have 100K over here. Moomoo does let you use a little bit of leverage or a little bit of when it comes to selling options. So technically, they will allow me to use my capital to buy some of these. Although what happens is that when the puts expire and if it's in the money, I'm going to have to buy those shares and I may not have the capital. So that is something that I'm going to have to manage. So let me share my screen over here so you can take a look at. Okay. If I share my screen, you can take a look. Okay, so this is the Instagram portfolio. This you can just ignore the main value that you're seeing versus what you're seeing on screen. Of course, what you're seeing is live. This is just a snapshot. 17% of the portfolio is in Grab right now. In SoFi, 5% is in Grab. I have around 15% of unused cash, which is around $15,000, and collateral is around $61,000. So how this works out is actually, if you guys are new to this channel, you want the updates before I come online, or if you feel like you are not able to make it to the live stream, you can follow It's Elijah Cheng. Works on both X and Instagram as well. Okay, it works on both X and Instagram. Basically, I will be posting some of the main talking points on the live stream over here before the live stream usually, because I'll prepare beforehand. I'll be able to put it up on X and Instagram before I do that. So this is the stock portfolio positions, and then you can see because of our options, the overall portfolio is still green. I don't get the Grab thesis. Isn't it barely profitable if at that point? Okay, so for me, like I said, the Grab thesis has always been a play on the emerging market space rather than some people I know trying to pick out Vietnamese companies or Thai companies and things like that. I personally prefer to get exposure to the emerging market space. It's just 5% of my portfolio, and I prefer to do it through Grab because I see and use them every day. I'm going to Vietnam next week, and I'm going to be using Grab for the majority of my trip over there. So for me, this is a very long-term thesis, playing into the macro theme about the rising middle class in Southeast Asia. And I think perhaps for me, because I am in Singapore within Southeast Asia, I can see it a little bit. I can actually see some of the changes in or the increase in lifestyles of the countries that are surrounding Singapore, which is why I do want a little bit of exposure. I think it is a good hedge for the portfolio, rather than have everything in just US and China. Does the valuation even make sense? I think right now, if you are looking at it from an enterprise value, it does. I think if you're looking at it at a P ratio, because they just turned positive, it is a little bit hard to justify because they have over $6 billion in cash and equivalents, and if I'm not wrong, their market cap. What's their market cap? Let me see. Their market cap is $15 billion, right? They have just over, okay, $15.5 billion of market cap. Take away the over $6 billion in cash and equivalents. That means it's only a $9 billion enterprise value, which is because they have barely any debt on their balance sheet. So if you look at it from that lens, it is attractive. But if you look at it at P ratio, because they just turned profitable, it is not the most attractive on the P ratio basis. You might think, C limited and things like that uh, seem a lot more attractive on the valuation basis. I think if you invest in Grab, the main thing that you're looking at, number one, is the growth of the middle class in Southeast Asia. And the metric that you should be measuring Grab with is how many users they can continue to add onto their platform. Because right now, one of the reasons for the poor valuations that you're looking at, right, is because the management is focusing on their affordability options. So every time you order Grab on your screen, you can actually see a saver option where you can perhaps choose, you don't have the fastest delivery. Right now, for example, if I order something that I can order food that takes around half an hour to come to my house. But if I choose the saver option, perhaps the food will take 50 minutes to come. And why that is usually because the driver will then take on a second order, deliver that second order on the way to delivering the order to your house, which means that it's going to take a bit longer for you to receive the food, but at the same time, it saves you money. So the reason why Grab is doing that is that because a lot of the people within Southeast Asia, the spending power really isn't that high. And so when Grab does that, it helps a lot of these people in Southeast Asia to find their app or their ecosystem a lot more accessible. They come online over time as they grow their relationship with Grab. Right now, you're seeing the user growth without a significant rise in revenue, but over time, as the middle class in Southeast Asia rises, this will continue to rise as well. Isn't the middle class in Southeast Asia expanding at a very rapid pace right now? I would think so, but I think it's being pulled up by a couple of countries. Like I said, I think Indonesia is definitely. Okay. I wouldn't say Indonesia. Maybe I would say that the more popular countries that are benefiting from tourism, at least, which is boosting their economies, perhaps like Thailand and Vietnam. I don't exactly know the numbers, but I think a lot of the countries around Southeast Asia, unfortunately, there is a certain level of corruption and things like that within their government structure, and as long as that, or a lot of unrest and a lot of infighting, and so I think that takes some time to work itself out. So I think if you're investing for Grab, you have to pay attention to the correct thesis. You can't really use the P ratio right now for where they are in the business. $15 billion market cap, $6 billion cash on hand. That is basically 40% of their market cap in cash. So for me, that is pretty conservative if you consider that, at the end of the day, you need to understand their strategy. You need to be buying into that strategy, which means they're giving up the revenue growth for increasing their user count. Now, they are not entirely giving up revenue growth because they have guided for 20% revenue growth between 26 to 28. Now, I know a lot of you have been asking me to come up with another Grab video. That will be my homework this weekend. I will put together another Grab video, more updated one, speak about this a little bit more at length. And I'll try and find some stats about the middle class in Southeast Asia growing, and then so that I can give you a little bit more data on that, and perhaps that might make you feel a little bit more comfortable with the investment, or give you a little bit more insight for you to decide whether or not this investment would work for you. Okay, so from here, let's dive into the BMNR segment first. Thanks, Sean. All right, today is the 16th of March. It is a Monday. So BMNR just released their yep, okay. So they just released news on how much Ethereum that they bought. So we're going to be taking a look at this. And then I'll be going through with you some of the key metrics that I'm looking at when it comes to Ethereum and BMNR. And from here, we will take a look at the valuations, right? Thanks, Sean. Thanks, Bob. And thanks, Zeno. Well, first live stream. Okay, yes, like I said, really, the live streams are going to be more and more regular. This week and next week, these are the last 2 weeks where you will be seeing me for alternate days once I'm back from Vietnam. And then I can tell you how extensive Grab is in Vietnam. So technically, that Vietnam trip is for you guys. It is a research trip. I'm trying to see how extensive Grab's penetration is in Vietnam so that I can come back and tell you whether or not it's a good investment, right? So I think for me, in April onwards, you will see me every day. Okay. And I will find things to talk about. Every time I think that I'm only going to go 45 minutes, an hour on stream, I end up going more. You see, I haven't even started on BMNR, and then I still want to talk about Reddit and Zeta. If BMNR closes above 22 today, it will be very good. Okay, I haven't drawn the lines very clearly for BMNR. I just know $24 in my head. I'll take a look at that later on. But basically, like I said, now today on the 16th of March, we have had new updates from BMNR regarding their Ethereum position as well as their cash holdings. And then on top of this, we're going to take a look at some of the different metrics that inform us around the fundamentals of both Ethereum and BMNR. And at the end of this, we are going to take a look at the valuations of BMNR and how that has changes, how that actually changed with what we have today. Now, one of the importance that we need to understand is that Tom Lee has told us Bitmine is preparing for a major purchase of Ethereum at a certain point in time where they consider it to be the bottom of the crypto markets. Now, right now, this is still not the time, although they have announced an increase again. Sorry, not an increase. They continue to maintain the pace of 60,000 purchase of Ethereum this week, which is an increase from their previous levels of 40 to 50,000. This is still not a big buy. I believe they still have a bunch of cash on their balance sheet, which we will take a look at later. And they're going to deploy a majority of the cash. So later on, what I'm going to be doing as part of the valuation is to take a look at how that cash actually translates into the amount of Bitmine or amount of Ethereum on their balance sheet. From there, we will run some of the numbers regarding staking and their total Bitmine position to see where they will actually end up. So from here, if you take a look on screen with me, this is the news report that Bitmine just released today. They have around 3,040,515 staked Ethereum. This number hasn't changed for a while. Why that is, I'm not exactly sure. But I think it's safe to say that as they are building out Maven, I think right now we have been told in the past that Maven will scale by sometime the end of Q1. Perhaps in terms of the timeline, eating a little bit into Q2. Right now they might be at capacity, so that is why they are still at 3 million. I think we have yet to hear news around Maven from the company, and we are still waiting on that. But like I said, not to worry, because they plan to stake majority of their Ethereum, as well as expanding out their Maven capacity to other financial institutions and even other tokens that run on a proof of stake solution. Ethereum needs to stay above 2300. I agree. I do think Ethereum does need to stay above 2300. I believe that a fairly strong resistance. So if we break above that, I think we can say that it could be a start of a reversal. I think really remains to be seen, right? So Bitmine increased its investment into 8co, okay, by 80 million to support ops, 50 million purchase of OpenAI equity. So okay, so this means on top of buying Ethereum, they also spent 80 million to support ops to purchase OpenAI equity. Ops is now the only publicly listed equity in the world to give investor direct exposure to OpenAI. Okay, so Bitmine acquired 5,000 ETH from the Ethereum Foundation to enable the Ethereum Foundation to fund its core operations. So this is one of the OTC's deal that I was telling you before, that Bitmine tends to, or it's likely that they are engaging in these OTC's deal. That's why you can see them increasing the amount of Ethereum on their balance sheet without significantly moving the price of Ethereum in the open market. And that is how they're actually building up their Ethereum stash without, increasing the market value of Ethereum. That is actually beneficial to them, which is why Tom Lee has been on record saying that, you know what, if Ethereum stays below 3,500, he's happy because he can keep buying at very cheap, or what he considers to be very cheap prices. So he's showing us that they are not slowing down. The thesis is still on track, at least from the Bitmine front. And I think if you compare what Bitmine is doing to the other digital asset treasuries, as an investor, it should put your mind at ease, because they are buying Ethereum at a pace that is faster than what we are seeing other companies do. All right. So if I scroll down, Bitmine is the 105th most traded stock in the US. This liquidity is important for them to be able to drive their purchases, especially if they do need to sell the at the money to raise capital. But right now, it seems like this week the capital raise wasn't as aggressive as the last couple of weeks, right? So if we go all the way down over here, we have already spoken about the 80 million investment in ops, so that they can acquire a 50 million stake in OpenAI. And also Ops also invested 25 million in Beast Industries, right? So basically, they gave Ops the money to invest in OpenAI and Beast Industries. Let me see what else is there. Okay, acquired 5,000. Okay, so Bitmine has slightly increased the pace of Ethereum buys each of the past 2 weeks. And as our base case is that Ethereum is in the final stages of the mini crypto winter. Now, in the past week, we have acquired 61,000 Ethereum compared to an average of 45,000 to 50,000 acquired weekly. In fact, it was actually less than that. There was a period of time where they were only acquiring 20 to 30,000. Later on, I will show you. Let us take a look basically at the spreadsheet that I have, and then we are going to work it out from there. So as of 15th of March, no change to the amount of Ethereum being staked. It's just over 3 million Ethereum being staked. And at scale, when it's fully staked, the Ethereum staking rewards will be $272 million annually using a 2.81% 7-day BMNR yield. Right. So again, if you take a look at the CESA ratio last week, I said that, CESA ratio right now is around 2.64%. And they're hovering always between 2.8 and 2.9%, which means there is a healthy spread between where Bitmine is getting their yield compared to the CESA ratio. And as long as this healthy spread exists, it means that they can actually license out Maven to other financial institutions and perhaps make a little bit of the spread between the CESA ratio as well as the yield they're able to get as an institutional validator network. Annualized staking revenues are now $180 million. This 3 million ETH is around 66% of the 4.6 million Ethereum held by Bitmine. So, okay, right now, the CESA composite ratio as of Q4 is 2.79. So I guess it depends where you get your data from. Last week, we saw 2.6. Now it's increased to 2.79. They're basically, that means to this week at least, they're basically right at where the staking ratio is. So I think in the long term, we need to track how does this actually perform, because if they can over time actually perform at a pace that is healthily above the CISA ratio, then they are able to make that spread. Even if they are not able to, I think at least the thesis or the argument from Tom Lee over here is that institutions want to go through them because of all the safeguards and all that and things like that they have, right? Because they're trying to build a system that is safe, that is verified, that is audited, and I think institutions might be not might be institutions should be willing to pay a fee for that. The reason why, for me, I would prefer to see that spread over there is because as someone that runs a business, I can understand, if I make you more money, then I will take a little bit of the profit that I'm making for you as my payment. So I make sense of it that way. But I think over here, if what we are seeing is true, Bitmine is operating at 2.81. I believe last week is 2.91. Later, I'll go and check. But if they're operating at 2.81 and the CISA ratio is 2.79, and they can still charge a fee to the institutional investor, Tom Lee's argument is that, people will want us because we are audited, we are transparent, we are safe, people already know us, people know me as Tom Lee, and I think that is what is going to drive institutional adoption over. Whether or not, and I think it's really still too early to tell how this will play out. Perhaps I should add another column over here to track their 7-day BMNRU. That's something to think about. I was thinking about so Bob here says he's thinking about getting some SBET, mostly as a trade. I would do want to keep my BMNR for a long-term hold. This was something I was toying with as an idea. I think my concern is that because they are not buying Ethereum now, you're really, like you said, buying it for just a trade, right? When Ethereum recovers, I think all of them will recover. Waiting for their buys to go over. I think all of us, you and me both, really, all of us are waiting for their buys to once again go over 100,000 ETH per week. Stocks and crypto, I don't trade, all long-term plays. Yes. I think the Mr. Beast purchase or the investment in Mr. Beast has really divided opinion. If I'm very honest, I don't really know where I sit on the fence. I understand that purchase. And I think Mr. Beast is influential if you're talking about the Gen Alphas and perhaps Gen Zs. And I know he has purchased a financial institution, some fintech recently, right? So I think really let's see how this goes. The one thing I would say is that I am so surprised at how much traction Feastables is getting even in Singapore. I'm like seeing it more and more in stores, and they're taking up more and more SKUs. So if he can scale a chocolate brand based on his following, perhaps he can really make this fintech thing work. I think everybody is assuming he can make this fintech thing work because he has an audience. And of course, I'm not trying to say that I doubt that Mr. Beast can do it. I'm just saying that it is a completely different field. There's a lot more regulations in the financial industry, and whether or not he has the right people around him to advise him, really, it is. I think it's not as set in stone as some people make it out to be. So I think if it plays out, fantastic investment, but it is not a sure thing for me. Right. Okay. So where was I? Oh, wait. Let me just go back and check last week because I believe the. Okay, this was last week's. Was this last week? Oh, sorry. Here, wrong one. All right, give me a minute. Okay, one thing I want to check is over here. I believe this is the disclosure on the 9th of March. Now, earlier on, we were talking about the CISA ratio. And one of the things I was saying is that if there's a spread between the CISA ratio, as someone who runs a business, I can understand. If I make you X amount of profit, it is only natural that I take a percentage of that profit as my payment. So, which is why I was always hoping for Bitmine's CISA ratio to be above the staking yield. Now, I think, like I said, the CISA ratio, where it currently stands, depend on where you're getting the data from. Last week, we saw that the CISA ratio was around 2.64%. And if I take a look at last week's disclosure, you scroll all the way down, you can see that the BMNR 7-day yield is at 2.91%. Let me zoom this in a little bit. I just realized you might not be able to see. Right, it's around 2.91% compared to 2.81% this week. So the concern over here that I am raising is that if it is too close, they will not have the spread to charge a fee. But I know Tom Lee has been arguing in the past that because BMNR's validator network, right, it is firstly built in America, secondly, it is audited, and because they are a publicly traded company, it is extremely transparent. Because of all these factors, institutions are likely going to be willing to pay a fee to make use of the Maven validator network. And basically, if he's arguing that they might not necessarily need a spread in order for the financial institutions to pay them a cut of the validator fee. Perhaps that is the case. I do not know for sure. Right. So it could be that the CISA ratio is running at 2.79. Bitmine is making 2.81, and yet they're still willing to pay Bitmine maybe 0.5 or even 1% of the fee just because they have that safety and then distribute the rest to their shareholders. Really remains to be seen, because the numbers that we're talking about when it comes to staking is huge. And since the numbers are huge when it comes to staking, even that small spread in percentage is a meaningful profit driver for Bitmine as well. MNAV at 5, easy. I also wish if MNAV at 5, if MNAV is at 5 today, Bitmine should be at $100. I mean, we all wish that would happen. Hi, Lawrence. No, unfortunately, I haven't gotten to take a look at Butterfly. Neither have I gotten to take a look at MeTech. Someone was asking me to take a look at MeTech because I was building out the whole thesis around Zeta and Reddit and taking a look into that. Because those are the two positions which I've already started in the portfolio. But definitely is something I will be looking at going into this week. When do you think their MNAV can get over 2 again? You want to know the funny thing about my valuations? In none of my valuation scenario, I assume that their MNAV goes above 2 times. I think there are quite a few of you here today who seem to be basically maybe first time to my streams, or you have just watched 1 or 2 of my videos. You haven't seen my previous valuations, so I might actually dive a little bit deeper into the valuations later. But at no point do I ever assume that their MNAV gets above 2 times. The maximum I assume is a 1.5 times NAV, and we still get to a pretty decent valuation. Later on, you will see, because it is going to be driven by fundamentals more than sentiment. So anything that comes above 1.5, to me, it is a complete bonus. What's up, Jonathan? Thank you. I'm learning how to run the stream efficiently, trying to run it as efficiently as possible. Yep. And so 1.5 is my max MNAV if the market gets bullish, which means if we see S&P above 7,000. If not, as long as we're still range bound, I'm still going to be assuming 0.9 to 1.3. All right, so with that, let's run some of the numbers on the spreadsheet that we have. Let me go to Yahoo Finance, because that's going to give me the price, or the average price of Bitmine across the last week. And then that is what we're going to do. So from here, let me jump in. See, I'm getting better at this. All right, so today is the 16th of March. Let's change the date. Okay, you know what? 16th of March. You can see price target 37. Okay, inaccurate because this was based on last week's projection. So right now, we have, what is the number of Bitmine that we have? Let's see. 4,595,562. 4,595,562. Okay. 4,595,562. All right, number of shares later on, we will update this when we do the accumulations at the back. So that's why the MNAV is not accurate right now. Cash and equivalents, I believe 1.2 billion, so no changes. So for those of you, it says my browser lost connection. Hi, Brian. My puts option tracker is done on Microsoft Excel. Sorry, when it comes to this, sometimes I'm a little bit slow. I'm not too sure whether I can share an Excel spreadsheet like this. I might try to recreate. No, I'm not. I might over time. Yes, I will try to recreate some of this on on Google Sheets and share it. But right now, because I'm starting off trying to build the portfolio, piece all the research and all that together, it will take a little bit of time, but eventually I will put it on Google Sheets so it's shareable. All right, so let's dive in to take a look at the accumulation of Ethereum, and then I will go through the valuations for those of you who are new here today. Okay, so if you take a look at the pace of accumulation of Ethereum, we are at 4595562. I drag these numbers down. You can see that this week, Bitmine purchased around 61,000 Ethereum, similar to last week. The average price of Ethereum purchase this week is at 2,185. Okay, so 2,185, right? Right now, we are around 3.79% of total overall circulating supply of Ethereum. I do remember that Bitmine used the circulating supply now is no longer 121, it's around 120,750. So this is the updated outstanding circulating supply of ETH, and that is why in Bitmine's disclosure, you can actually see 3.81%, which is exactly what we see over here. So this has actually shown us, which is one of the issues I was talking about with the valuation of Ethereum, that as the burn rate increases, right, some of the total circulating supply will end up being burnt off. Now, I'm not too sure whether is this to do with the Fusaka upgrade, but because this is the number that Bitmine is using, so just to be accurate, I'm using the same number as well. Okay, in terms of cash on hand, nothing over here, no changes over here. So if I were to drag this down, they basically raised $133 million this week. But I need to, okay. They gave $80 million to Ops for their investment in OpenAI as well as Beast Industries. So from here, $133 million, I need to add $80 million to that. So if you guys can't see, let me zoom this in for you over here. Okay, in the formula, I just plus 80, and then it's my formula. This accounts for the $80 million that Bitmine has invested into Ops, so that Ops can use that money to then go and invest in OpenAI as well as Beast Industries. So with that, press enter. You can see that this week, Bitmine raised a total of $213 million. Their cash basically stayed the same. And if I take a look at the price of Bitmine across the last week, let's share tab over here. Last week, 13th of March, right? Oh, sorry, this is daily prices. Let's look at weekly. 9th of March, the high was 2276, low was 1927. So over here, 2276 plus 1927, you just divide by 2. So the average price of Bitmine last week was around $21.02, and they raised a total of $213 million. That means they issued around 10.1 million shares last week. Right? So they issued around 10.1 million shares last week. Okay, sorry. So it's over here. For those of you who cannot see, let me zoom this in for you. All right. So I realized I was talking to myself. This is the zoomed in version that I was showing you earlier. This 80 that you're seeing at the front of the formula basically adds the $80 million that they gave to Op to invest into OpenAI as well as Beast Industries, and then the rest of the formula basically calculates how much capital that they raise in terms of buying Ethereum as well as cash holding. So right now, what is happening is that if I remove this $80 million, what you're seeing is that based on their buys of Ethereum in the past week and their cash holdings remaining the same, they basically raised $133 million, and then you add the $80 million for their investment into Ops. That brings the total capital raise to $213 million. Now, last week, when I take a look over here, earlier on, I showed you the price of Bitmine on average. If I take the highest and the lows on the week of 13th of March, the average would work out to be $21.02. And with that, that's how I get to 10.15 million shares being issued by Bitmine in the past week. So moving back into our valuation sheets over here, the number of shares now, I need to add 10.15. And again, once I do that, you can see the total number of shares outstanding is 516.65. Again, for those that are new, I just want to remind you that this is not the most accurate way to track their number of shares outstanding. This just gives us a ballpark figure, right? Because I'm just very simply highest, lowest, divide by 2, find the average. So please, disclosure, disclaimer, please do not take this as gospel. This is really just for us to get a ballpark estimate of how many shares they have so that the MNAV will keep up. Because right now, if I remove all these numbers, we only get this 470 million shares, right? Without all the additions in the last couple of weeks, it would seem like Bitmine is trading below 1 times MNAV, but they are not, because you have to include the number of shares that they are issuing every time. So today, based on the price of where they are at, it does seem like they're trading at 1 times MNAV. And I think one of the things that I have mentioned previously, it is that it is extremely encouraging to see Bitmine continuing to stay above 1 times MNAV, even in the crypto winter. This has allowed them to go out and raise capital pretty aggressively in the last couple of weeks. So with this, you can see total Ethereum holdings 4.59 million, cash and equivalent 1.2 billion, bringing the total net asset value per share to $22.53. And just nice, right now we are trading at $22.55, right on the money, which is why we're at 1 times MNAV. So again, projecting out 3 months to the end of Q2, 30th of June 2026, using a 50% margin of safety. Explaining this for the new people, which means if the current pace of accumulation, they're actually accumulating around 17,000 ETH per day, we are taking a 50% discount. The reason for that is if I take this number over here, multiply this by 7, it's around 61,000 ETH accumulated every single week, which is actually the exact pace that they're accumulating ETH right now, which is why 50% assumes that the crypto winter goes all the way until end of June, and they are keeping at this pace of accumulation until end of June. The percentage of Ethereum that BMNR owns right now, 3.81%, right? Because previously I was using the total outstanding circulating supply of ETH from another website. It shows around 21.2 million Ethereum outstanding. But if you take a look at Bitmine's disclosure, they're reporting around 120.75. So because of that, there's a slight difference. So I've changed my total outstanding circulating supply of ETH to be in line with what Bitmine is reporting. So using these numbers, you get a rate of accumulation of around 8,000 Ethereum per day, right? And there are 105 from today to 30th of June 2026. With that, they should get around 5.5 million ETH on their balance sheet. Now, remember, their long-term goal, or at least their goal so far, will be until 6 million Ethereum, which means that even if the crypto winter extends, by the 30th of June, there are less than 500,000 shares, 500,000 tokens of Ethereum away from their target. With this, let's say Ethereum prices 2,400, which is more or less where we are today. Cash and cash equivalents stays the same. The reason for that assumption is very straightforward. If the assumption is that we are still in the crypto winter, that means they haven't fully deployed their cash on hand. Okay, Ethereum staked, I am assuming it is going to be around 4 million by then, because right now they are around 66-70% of ETH staked. I'm assuming that once the Ethereum balance increases to around 5.5, minimally, they should stake also around 4 million, which is 72% of ETH stake. Now, right now, the recent disclosure tells you Ethereum yield for BMNR is 2.81. So that's what we're going to use. Therefore, from here, the staking rewards for BMNR on the 30th of June should come in at around $255.5 million. Okay, this part here, Maven revenue, fees that they collect from institutions and other tokens, not going to count. This is currently 0. And this is what I was talking about. Bear, base, and bull case. At no point do we need the MNAV to go to some extreme number. Like all along, starting from last year, people have been saying 2.5, 2, and things like that. If you take a look at my videos, I have never assumed more than 1.8 to 2 maximum. But even right now, you really have to bear in mind the sentiment. Can this go past 2? Certainly. I'm not saying that this will never go past 2. But I feel a lot more comfortable if it doesn't have to get past 2 and I can still get decent returns. So in the bear case, 50% dilution. Base case, 45% dilution. Bull case, only 40% dilution, which means from here until the 30th of June. So if you don't understand what this means, for example, if I take 50% dilution, all I'm saying is that by the end of June, they will have around 774 million shares outstanding. So this is for all the people that are worrying about dilution, okay? This price target of BMNR that you're seeing is with the assumption that by 30th of June, Bitmine's share count goes all the way up to 774, call it 775 million shares, right? Which means which means that they have to dilute a huge amount. So I'm already accounting for the dilution when I am calculating this valuation. Now, of course, if you feel like this assumption is wrong, feel free to do your own assumptions. But for me, I assume 50% dilution between now and uh, 30th of June should be fairly reasonable for my bear case. MNEF doesn't change, 0.9, because we're still assuming a crypto winter, and a 15 times PE ratio. Nothing changed. Base case, 1.1 times MNEF, 23 times PE for the staking yield. And similarly, bull case, 1.3 and 30 times. Now, using these numbers over here, in the bear case, we get a Bitmine price target of $21.73. Again, this is already assuming they reach over 775 million shares, right? They have diluted 50% from where we are today. Base case, similarly, over 700 million shares, we are assuming a Bitmine price target of $29. And in the bull case, we are assuming $36. Now, if you take all of this in aggregate, you get a price target by 30th of June at $29. Okay, in the next 3 months, just by accumulating Ethereum on the balance sheet and by the value of Ethereum staying at 2400, which is where we are today. It doesn't need a huge multiple in order for the price of Bitmine to slowly recover. Because as their balance sheet holds more and more Ethereum, the balance sheet gets more and more valuable. Okay, so this is where the magic actually happens, which is why I said the fundamentals need to be more important than the multiples. The multiples, anything can happen. Anybody can just put any multiple there and justify the price. And there's no way to track whether you are right or wrong. What we are looking at is increased total value locked on Ethereum. What we are seeing is that the supply of Ethereum on exchanges is dropping. And at the same time, we are counting on the price of Ethereum to at least somewhat recover because of gas fees increasing. I believe there's also the Glamsterdam update coming in the first half of 2026. I will do a video on that, breaking down some of the technical aspects of the Glamsterdam update so that you can understand how this improves the Ethereum network. That is for later on, still in the midst of my research. But let's say this just recovers to 3,000. And I think it is, I don't think anybody, no matter how negative you are around Bitmine and around Ethereum and crypto, you cannot tell me that if we see the S&P 500 go past 7,000, you don't see Ethereum at $3,000 in that same time span. So with that, if even at just $3,000, you're at a price target of $34. And I believe my adjusted cost basis is somewhere around 36, 37. So Bitmine doesn't even have to, Ethereum doesn't even need to recover to all-time highs for me to break even on this company. It just needs to recover to $3,000. And as long as they maintain their 1.1 times MNEF, we are basically broken even. You can see 0.01 because now we are at $22.72. And if you ask me, how can I be so sure that they can keep their MNEF? The reason why I am pretty sure that they can keep their MNEF is because we have seen the worst crypto liquidation event since the Terra Luna collapse, since the FTX collapse, and they're still at above 1 times MNEF consistently. So if they're able to do that in the worst, controversy in the crypto space since then, it must be something that is worse than Terra Luna, worse than FTX, and worse than the 10th of October liquidation event for it to drive the MNEF down below 1 and stay below 1 for a significant period of time. Because they have enough cash on hand, assuming that they keep buying Ethereum at this pace of around 200 million Ethereum per week. This $1.2 billion of cash on hand can sustain them to buy Ethereum for at least 6 weeks if they're buying at this pace. Now, of course, if we go into a crypto winter, that would actually assume they will slow down perhaps to this $100 million of ETH purchase every week. If that happens, this cash on hand can actually sustain them for around 10 to 12 weeks, which is nearly one entire quarter. So because of that, I feel pretty safe that even if we get another black swan event in the crypto space, Bitmine is actually well capitalized to keep buying, because eventually, as a retail investor, you will run out of cash. No one is made out of cash. If you are made out of cash, please let me know. I will stop streaming, and then you can teach me how to be made out of cash instead. Right? But otherwise, we buy BMNR because we think that BMNR can buy Ethereum at a faster pace than us. Right now, let me see. I don't even have my stuff open up. I'm so sorry. Let me see. My Bitmine, I have 5,600 shares and an average cost basis of $37.50. Once my current options positions are closed, it should be around $36. Yeah, $36.90. Yeah, so that's my current position, which is why I said I don't even need Ethereum to recover to I don't even need Ethereum to recover to $4,000 in order for my Bitmine position to break even. Yep. So my average is my actual cost basis is like 39.30 or something like that. It's broken down into the different options contracts, so I can't really calculate it off the top of my head. But I know when I account for all my options contract, which I've tracked since last August, average is around $36. 27 is a fantastic average. 36, you're basically right where I am. 40,000 worth at 66, $37 with 290 shares is fantastic. 120 shares, also 120 shares at 27. That's a very good average. But I'm thinking about selling my AMD. 30% of my portfolio, it's also around 30% of my portfolio right now. The rest is like SoFi, HIMS a little bit, Synaptics, and yeah, have a little bit left of some options here and there. What's up, Michael? Thanks for coming over here and, hoping to just provide a little bit more value, a little bit more color compared to what we are seeing online. Because I mean, I'm also in YouTube quite often. I'm also in X quite often. There's always a different perspective that I sometimes hope to see, and I just will give that slightly different perspective. Yeah, I think it's a hard decision. I wouldn't know what to do in that position as well. I think both are equally good companies. I think it really depends on your portfolio makeup and how risky and how volatile you are able to how much volatility you can actually withstand. Thinking of selling out Lisa for Nodo. I mean, I think if you think of what I would say is last year I found last year the reason why I invested in AMD over Nvidia is not because I thought that AMD is a better company than Nvidia. I thought the disconnect between the pricing of AMD and what they were actually doing was bigger than the disconnect in Nvidia. So that's the first thing I have to say about that. The second thing I have to say about AMD is that if you have followed management's commentary, they are very confident when it comes to inference. And I think it really depends on how well they can execute, and you really need to keep track of how they are performing in the next couple of quarters. Yes, I think AMD is a fantastic position. I think if it were not for the case that I needed to raise money for this public portfolio, I wouldn't have sold my AMD as well. Because I got in at a pretty safe average at around $110 or so. Right. And so with that, like I said, not really concerned about Bitmine. Now, I just want to show you right now one of my thought process around would I sell more AMD to accumulate Bitmine? Now, the responsible side of me would say no. If a big portion of your portfolio, were you the one that said 30% of your portfolio is already Bitmine? As much as I believe in concentrating of a portfolio, um, I, I have suffered from being overly concentrated in one name in the past. So the story is I bought slightly over, I think 1,200 shares of Palantir at around $10. And I bought 400 shares of Palantir for my parents at around 18, 17, $18. Okay. And I had most of my portfolio in Palantir at that point in time. What happened was I decided to, once Palantir doubled, once it reached around $20, $21, $22, I sold out of my entire position for the reason that valuation is too high. Palantir's valuation is too high. And my assessment at that point in time was that SoFi is so undervalued. Because of that, SoFi is likely to get from I think $6 to $12 faster than Palantir can get from $20 to $40. And we all know that I was wrong. And unfortunately, helped my parents retire. I'm still here, not retired, because I sold my Palantir, put mostly, I would say at that point in time, over 90% of my portfolio in SoFi. And if you have followed SoFi for the last couple of years, 22, 23, even the beginning part of 24, that was pain. It was real pain. It was just down all the way. And while the market was rallying, because the majority of my portfolio was in SoFi, I had to watch everybody else enjoy the gains. And then I'm sitting on SoFi with an $8 cost basis, struggling to get past $7. And that was my story for 2 years, which is why in the past I would say, yes, you should put everything into one company. Now, after going through that experience, seeing what happens, because I was managing two separate portfolios. One is mine, where I'm fully concentrated in just usually two positions or sometimes even one position, compared to my parents' portfolio. And actually, I think there is a balance to be had. We do not want to be too diversified, but I think being too concentrated as well at the same time does increase your risk by a lot. So you can see I was actually right about SoFi, but it was really tough for me to hold between 22 to 24. I'm worried about SoFi this year. I think interest rates will not be cut, as I expect big growth in stock price will be delayed. Now, of course, I think if you're talking about narrative-wise, if we do not get a rate cut, okay, then perhaps SoFi's stock might stay down. But if you're talking about understanding the company's assumptions of the macro environment, I don't think they're expecting more than 1 or 2 rate cuts. So if we get 0 rate cuts, I believe they can still achieve their target as long as unemployment stays low. Yeah, so I think last week I showed you guys I exited my parents' Palantir position at 3 points, at 75, at 130, and 180. So on average, I exited at around 180. To them, that's a 6-7x, which is fantastic for them. But unfortunately for me, because I was so fixated on just having one position, I want to concentrate everything into SoFi. Sometimes not sometimes, the market knows how to humble you, and I have been humbled, and I know that there is a balance. We want to concentrate, but concentrate doesn't mean YOLO full pot into one position. I would say if your portfolio is less than 50K, 3 positions is quite ideal. 100K, that's when you can perhaps go 5 to 7 positions. I would think that at no point I would go more than that. So I went from a very big swing, like pre 2020, 21 maybe. I was like 17 positions. Too many for me to keep track of. When news happened, I didn't know what to do. Post 22, 23, I went too heavy into the concentration part. I literally had Palantir for a long period, doubled, and then I went all SoFi. Again, the Palantir thing worked out in a sense until, logically at that point in time, really, as much as I believe Palantir growth, I did not understand how much the market would value Palantir's growth. And SoFi was the so-called more obvious play to me. So sometimes what is more obvious to you, the market thinks differently, and there's nothing you can do about it. So that is why I think a certain level of diversification helps. I'm sorry if that's the long-winded way of answering your question, but yes. Genuinely, I think if you've got a smaller portfolio, still 3, 4 positions, perfectly fine. You don't have to put everything into one basket. Because your thesis, your direction can be right. Technically, you could say I'm like Tom Lee. I thought, SoFi would double faster than Palantir. And on a valuation basis, that seemed to be true, right? How long can the market make SoFi undervalued? Longer than I expect, apparently. All right, see you later. Have fun with your golden retriever. Love a golden retriever. I still remember my aunt's golden retriever. When I was much younger, I tried to take it out for a walk. In the end, it took me out for a walk. Yep. And you know what? If you're starting out, 3 stocks, core positions that you can follow, I think it is perfect fine. I'm not talking about people who just want to dump money, ignore it. Those people, you know what? Index funds all the way. But if you are someone who is learning the craft, learning how to understand companies, understanding how to perform fundamental analysis, 3, 4 positions for a small portfolio below 50K, I think it's perfectly fine. All right. So that is my take on BMNR. Not too concerned. I'm going to record a more put together piece on BMNR later on. I was hoping to do a one take in this live stream and then I can clip it out for a video on Thursday. But I think it was more important for me to answer some of the questions on stream over here. So you know what? I'll just do that separately. I'll include a little bit more data points on the total value log and things like that to give you guys a little bit more context about the valuations, and then you can watch that on Thursday. BMNR, SoFi, AMD. I mean, it sounds solid to me. Is AMD up today? Let's see. Hardware. AMD. Okay, AMD up 2.5%. Fantastic. Okay, NVDA up 1.8. I will have to go and watch GTC later on to see what they announce and the progress of what is to be expected. Wow, SanDisk. SanDisk is not stopping. My goodness, it's 714. That is crazy. I never ever thought SanDisk would be a $700 company so soon. But that is the world that we are living in today. We need memory, and then I think we are seeing stocks cool off a little bit. I wouldn't say come down all the way. It is quite interesting to. It is actually quite interesting for me to say that Ethereum is actually holding up my portfolio. I have around 6, 7 Ethereum, and then I have BMNR. That is my crypto holdings. And it is my other positions that are down, but BMNR in the last couple of trading days has been holding up my portfolio value. All right. I'm going to show you one of my other. Let me see. Okay, I want to talk a little bit about Zeta and Reddit over here. I know that these two are different companies. Although they're both in the advertising space, they serve different parts of the value chain. That I am very, very certain of. So I'm not mixing the two and telling you that these two companies are comparable. But when building out my portfolio, one of the things I wanted to explore is moving into the advertising space. Now, the reason for that is because I really liked Google in the past. Right now, I think Google is fairly valued, which is why I've moved most of my Google investment over to Amazon. But I do still want exposure in the advertising space. And I just want to discuss a little bit about Zeta and Reddit over here and some of the concerns I have around Reddit. I know Reddit's growth is like insane. I think they're growing 70% year over year. But Zeta is more of the slow compounder. And I think there are aspects of their business. Please do not quote me and say that Zeta is like Palantir. Not saying that. There are aspects of the business, the way that they run the business is very similar to the business model that Palantir is using with the forward deployed engineers. So I've seen that process actually works. I think if Palantir have not proven that it has worked, I'll be a lot more skeptical. So if you take a look over here, these are my financial snapshots. Let me see if I can. Okay, so this is for Amazon. Let me go. Where's my? So you can see this is where this is not This spreadsheet that I'm sharing with you, this is not a super in-depth analysis. This is every single quarter when the earnings are out. I will try and update the numbers here so that I can see these graphs and get a high-level overview of the trends of these companies, right? And so this is where I use to collect some of the high-level data to at least try and understand before I dive a little bit deeper. So these high-level data need to be painting the correct story before we take a look at before we take a deeper look at the company. So I just want to walk you through where Reddit and Zeta both sits in terms of the advertising value chain, because hopefully this is where it starts to make sense for you. And as I talk through it, hopefully this also makes sense for me. Now, I'm gonna at the end of the day, when you take a look at my portfolio, you would realize that I have sold 7 cash puts on Zeta. Right now, Zeta's market cap is around $4.3 billion. P ratio extremely high, 91.5. I believe this is because they just turned profitable in the last quarter. Current price of Zeta around $17.86. Now, this scaled customer count over here that you're seeing, this is growing at around 14. They have around 602 scaled customers. Scaled customers for Zeta is quite simple. This metric, if I just put in bracket over here, customers spending over $100,000 plus customers spending over $1 million. Now, what is interesting to take note over here is that while the aggregate number of these two customer groups is growing at around 14-15% year over year, we are getting around 14.2%, 602 customers. What is interesting to note is that the customer spending over $1 million with Zeta is increasing at 24%. So the reason for that slight slowdown that we are seeing in Zeta's customer growth is because they're choosing to focus on some of these bigger customers. And with these bigger contract sizes, sometimes the sales process take a slightly longer time to close, right? Compared to a 100K contract. A 100K contract for a business might be something you can close, over 1 or 2 meetings. But with $1 million contracts, they really need proof of work. They really need proof of concept, and then from there they can propose it to their board, and then from there they get the closure. Can I please share my X account? Sure, give me a minute. X account over here. All right, so this is a short advertising break. For those who are interested in my X account, this is the X account. It's Elijah Cheng. Yeah. And this is the same handle for Instagram as well. So in X, you basically get the Word version of this, right? I'm typing everything in words. Then in Instagram, you get the slightly more polished version. It is also the same. It's Elijah Cheng. You get to see the polished version. You get to see some of my overviews on some of these companies. So what I'm trying to get better at is to transform some of these overviews into longer written thesis that I can put on X. Because right now, I do not have anything that is the correct length for X. I have an extremely long thesis, and then I take clips or certain writings from it and put it into Instagram. I need to make it where, or maybe I should use Claude. Feed it my whole investment thesis and then ask it to come give me something of a certain character length for X. Maybe I should do that. But basically, my point is I do a long investment thesis that I use as my script for videos, and then I post the high level content on Instagram for people to at least get an idea. And then from there, I'm trying to be more frequent in posting on X the written form content. So this is where you can actually find me. If you cannot turn up to the streams, you can be sure that most of the things that I'm sharing on stream will be shared on these platforms as well. So at least take a look, have an idea what's happening, and then when you watch the stream, perhaps it'll be a little bit more easy for you to catch up. Right? So back to the Zeta and Reddit discussion. Back to the Zeta and Reddit discussion. So what we're seeing, like I said, with Zeta is very strong customer growth. They're focusing on the bigger, longer term contracts, bigger size contracts, which would take a longer time to close. That is natural. And because of that, that's why we are perhaps seeing overall their scaled customer count seem to be falling off slightly. But actually, it is still pretty much range bound across the last couple of years, consistent between 10 to 20%. So which is quite a healthy clip. Plus, this is actually driven by a 24% year-over-year growth in customers over $1 million contract with Zeta. So I feel extremely comfortable with that. You can see their revenue growth. this is really like a SoFi-esque kind of growth, right? They're telling you this is what we'll do, and they're very steadily performing at around 20-30% growth year over year, quarter over quarter for the last couple of quarters. This has been fantastic. I believe 16 or 18 quarters consecutively beat and raise. Nothing to scoff at. And you can see over here, this is the first quarter that Zeta has turned profitable, generating $6.5 million in profit. Yet all the while, what is impressive is that they have been free cash flow positive for such a small company. This is actually very, very impressive, right? So you can see key business metrics: scaled customers, growing, revenue growth, cyclical, which is normal for an ads business, but still growing. Revenue growth rate, very steady at around 25%. Profit margins, slowly increasing. You can see we have just inflected to profitability. That's where I usually like to get into companies. And then free cash flow and margin steadily increasing. All right, so this is Zeta. Moving on from Zeta, we have Reddit. Now, with Reddit, the daily active unique user, this is, in a sense, if you're looking at the daily active unique users, because this accounts for both logged in and logged out users, right? So when you account for both logged in and logged out users, you actually get around 19% year over year growth, which is more or less in line with expectations, more or less in line with what they've been doing in the last couple of quarters. Now, my only concern is this. Let me show you the fourth quarter report from Reddit. If you take a look at the fourth quarter report from Reddit, this is the daily active users that you can see over here. It's around a 19% increase year over year, so no problems over there. But you can see the login daily active users. In the US, this is actually slowed to 5%. And globally, this has slowed to around 10%, while their daily active users globally shows 28%, but the login users is only growing by 10%. Now, personally, for me, like I said, that's why I feel like YouTube, this investing community that we have on YouTube in like Amit's channel and things like that, and on the various channels, these give investors insights into the different parts of the world that you wouldn't otherwise have gotten an insight into. Because if you ask me in Singapore, I would say that who uses Reddit? Like nobody really, really uses Reddit unless you are playing a game, right? And that particular game has a thread on Reddit. Otherwise, I would say that I know close to 0 people using Reddit if it's not for a game. That's the context in Singapore. And none of my friends uses X. Everybody is surprised that I use X. So I think when I see metrics like this, I need to take a little bit of time to dig deeper into Reddit to understand whether or not this will affect their ability to scale their advertising revenue. Because right now, what you're seeing is that daily active users internationally is growing 28%, but only logged-in users are only growing 10%, which means the other 20% is likely made up of people who are logged out, which is not a good thing because I'm probably one of those logged out users. You can't? Oh, wait. Must I accept? Do I need to accept you following me? What's your handle on X, Michael? You can leave it down in the comments later. I can make sure I add you on X, and then yeah, I'm quite surprised that you can't DM me on X. Yeah, because I have people DMing me on X, so I'm not too sure what's up with that. You can try and add me again. Let me know your handle, and I'll see if I can DM you as well. All right, so back to this Reddit thesis. Sorry, back to my screen. Where's my screen? Okay, so back to this Reddit thesis over here. I think my concern is whether or not this will impact their advertising revenue, because right now they're growing at 70% year over year advertising revenue. I'm worried that this is one of those cases of like Enphase and Peloton where, the reason why I did not buy Enphase at $100 or even $90 is that because I saw their inventory build up. And while people were only focusing on revenue growth, I was focusing on inventory. So there were a couple of my friends, especially in Singapore. I'm not sure if they are listening to this podcast as well, but this live stream as well. But if they are listening, they will know that I told them that not to buy Enphase above $70, 60s. Perhaps if you want to start at 70 and DCA down, that's fine. But because there were people talking about Enphase in Singapore, people got excited about Enphase somewhere in the $90 and $100 range. I didn't get excited about Enphase in that range because I saw the inventory build up, which is why I told my friends 70 and below. And I'm always concerned with all the key business metrics. It's because I find that in the long term, this is exactly what drives revenue growth. The reason why I miss Palantir, and I will learn this lesson and I will follow it very, very closely right now, is that because Palantir was adding customers into their ecosystem day by day by day, they just haven't recognized the revenue. And I failed to actually catch on to that. And I think these key business metrics is what will eventually drive revenue growth. That has been proven true in Palantir. That has been proven true in SoFi. This is happening right now in Grab. We're seeing the same thing. People are complaining about Grab being expensive, but actually their user base is growing. They are getting into all different parts of Southeast Asia. And so I'm just wondering to myself, when it comes to Reddit, I'm not too sure if anybody who has studied deep into this knows, because I will need to spend a couple more days looking into this, that whether or not this locked in daily active users in the US and globally slowing down to 5 to 10%, whether or not this is going to impact their ability to scale their advertising revenue. Because if advertisers look at this and they see that, hey, you're only growing your locked in users at 5%, then perhaps this may not be the best use of my advertising money. And so this is where Zeta and Reddit is in different parts of the value chain in the same advertising space. Zeta is helping the companies try and find the best space to advertise. Reddit is just one of the channels of advertising. And the problem with that is that it seems like their locked-in daily active users for global and US is growing slower than their overall daily active user growth, which means that the locked-out users is growing faster, which means people tend to use it and they're not interacting with the platform as often. That is my concern with it. If you are talking about purely from a revenue growth perspective, I know this is extremely strong. If I go back to the tab over here, Reddit is currently a $26 billion market cap company with a PE ratio of around 50 times. Now, this is based on last week's price. I need to take a look after the price rise today, but I believe it still should be in the ballpark range of 50 times PE. In the last couple of quarters, this has been extremely impressive. 53% year-over-year growth, 67, 68% year-over-year growth, 71% year-over-year growth, 62% year-over-year growth, 77% year-over-year growth, and I would say 68, 70% year-over-year growth. Just in six consecutive quarters growing above 50% is extremely, extremely impressive. And you don't get to these numbers by being fundamentally weak. So therefore, I'm asking, to what extent do these locked in, locked out members, to what extent do they affect the ability of Reddit to scale revenue? I can't answer that question right now, which is why I decided to go straight for Zeta, who helps companies to choose the value proposition or choose the channels at which they do their advertising, compared to just buying Reddit outright. Because the digital advertising value chain basically has three layers, if you ask me. You got the demand side, that's the advertisers, the brands, the companies that are spending the money. And then you got the supply side, right? So that's all these platforms, Reddit, even YouTube, Instagram, where the advertisements actually get shown. And then in the middle, that's where Zeta actually sits. That's the technology, the data. I think that is where they try and pair the demand side, the advertisers, with a platform where their customers with the highest intent to buy are on. So Reddit is definitely one of the companies on the supply side. They are a place where advertisements or advertisements appear to people. So, when Tesla, when SoFi wants to advertise, run a digital campaign, Reddit is probably one of those places where their ads will pop up. So 95% of Reddit's revenue actually comes from serving advertisements to their member base. I believe their member base now is 120 million members, right? So 95% of their revenue comes from there. they're actually building out a second revenue source, which now only makes up 5% of their overall revenue, which is data licensing. They are licensing out some of their user data to some of these bigger companies over there. Whether or not this will become a bigger part of their revenue and cushion a little bit of that volatility remains to be seen. But for right now, this is still a small part of their revenue stream. Nice to have you, Zeno. No problem. Have a good day. I'll see you on Wednesday. Yeah, I should be on Wednesday. Because right now I'm just talking through my Zeta and Reddit thesis, and then on Wednesday I'll be talking about Iran and Nebius. All right, have a nice one. See you. I'll be continuing to yap about Zeta and Reddit over here. All right, so where was I? Okay, so for Zeta Global, they, like I said, I'm not comparing apples to apples over here. Let's be very clear. I'm not saying these two are comparable companies and then we are choosing one. They are both in the advertising space, but advertising space are made up of three layers. Zeta Global is in the business of connecting the demand side, which is the advertisers, the businesses, with the supply side, which is all these platforms where the buyers are on. So what they do is that they use their AI infrastructure. Right now, I believe it's called powered by ChatGPT, Athena powered by ChatGPT, to run some of these advertisements for companies on all the various platforms, and they help them to figure out who to target, what message to send, when to send it, what channels to use. And when they actually do that, they run it on the test basis on just one ads platform first. And what the customers actually report during that time is that they see a 6x return on their ad spend. So they get a ROAS of 6x, which means every dollar you put into advertising, you get $6 back. And so I think on that basis, that has allowed them to scale very profitably across all of these members that they have in their ecosystem. Now, one of the things that when I did my research on Reddit, and you guys can feel free to correct me if I'm wrong, is that Reddit is pretty unique because of the user intent. Now, for me, I always thought that Amazon, like when someone is searching something on Amazon, there's high user intent over there to buy, because I've never seen Reddit as a place with high user intent, because I'm searching for like Football Manager, Clash of Clans, things like that. There's no intent for me to go and buy something. I mean, I guess apart from maybe the game Football Manager, right? There's no user intent for me to go and buy something. I use that to find out information. But I think the argument from the CEO and things like that is that Reddit has a lot of user data, and it has user intent on buying. And so because of that, they are comparing themselves with TikTok or Instagram, where people are more passively scrolling. Now, I'm not too sure, is it because of how I use Reddit? So I don't really see that point of view. And whether or not that is the case for people elsewhere, it's a little bit hard for me to understand, which is why I feel more comfortable investing in Zeta, because I can understand Zeta's business, but I can't definitively nail down that the user on Reddit is a high intent buyer. When someone, because yeah, so to me, I think that is something that I'm not sure, because one of the reasons why I started to use Reddit is because one of my friends, he was in Switzerland, he missed a train, right, and he did not know how to get from one town to another in Switzerland, and he just posted a thread on Reddit, and he got a reply within 5 minutes that a local Swiss person taught him how to get from one town to another. Because the train was down, he ended up using a bus and things like that. So I've never really seen Reddit as a channel where the users are high intent buyers. I could be wrong on this. If I am, that may change my overall view of the thesis. But if you're talking about the total addressable market, because although they are in the advertising space, I think the total addressable market is slightly different. For Reddit, the primary total addressable market is the digital advertising space, right? So that is projected to grow to around, I believe when I was studying Google, around $750 billion, growing at around 10 to 12% annually. So which means if you take a look at what Reddit is doing right now, growing at around 70%, they are taking market share over here, but they do not compete for the entirety of these $750 billion, because they're in a sub-segment of this entire digital advertising space, in the more social and community aspect of the of the digital advertising space. Now, when I did a little bit of research into it, I think what this meant is that there are different layers towards digital advertising, and they are more in that community and social aspect of there. I have to take a deeper dive into the other segments of it, because when I invested into Google, it was very easy, right? Digital advertising, they're in every single market, but because Reddit is just in that one subsection of the market, you do need to understand that subsection a little bit more. But this is where I am in my research right now, and this subsection seems to be worth around 150 to 200 billion dollars globally. Now, I do need to corroborate a few sources to be extremely sure. Now I only have one source that tells me that. So because of that, the value proposition of Reddit is around, okay, the total addressable market for Reddit is around $150 billion. Right now, they are generating around $2 billion, which means they only have 1 to 2% of the market share. So could they even double or triple, like grow to 2 to 3% of a market share? If they can, then they still have a long runway to go to, right? So that's why if you invest in Reddit, this is one of those stories where they do not necessarily need to beat everybody else. They just need to do slightly better than what they're doing right now, or even keep the status quo. They do not need to be growing at 70%, even at 20, 30%. Over time, they would actually get to uh, that 2 to 3% number. Now, the problem that I'm having right now is that when I look at revenue growth, I like to compare it with the total addressable market. If the total addressable market is growing by 10%, I want to know that the company is growing faster than 10% to indicate that they're taking market share. Right now, I only have the data for the total total addressable market for the global digital advertising, which is around 10 to 12%. I do not have the data specifically for each section within the global advertising market. So because of that, it's hard to determine whether or not Reddit is actually growing faster than the market, or they're just growing because the market is growing. Whereas for Zeta, on the other hand, they are in the data technology side of I would say the ed tech kind of business. This is very different from the consumer facing side of the business, where it is actually on. The TAM over here is around 500 to 600 billion dollars, and so I think because of that, it is easier for me to understand Zeta's TAM, right? Because they're going after the entire global marketing technology. Of course, over here, again, if you want to break down, the component that they're in, they're not competing for the entire pie. They're competing for the subsection of the pie. But because they are a software company, and because they just launched Athena, they're still building out some of their offerings. I think they're eventually going to go after most of this pie, but right now they are they are going after a very specific section, what I believe the CEO calls intelligent marketing or something like that. And so I think for me, because of this, Reddit definitely has the highest growth. I What's left for me to understand is whether or not this growth is proportionally tied to the number of members on their platform, and if so, then how whether or not this growth can actually last, into the next couple of quarters remains to be seen, because we are seeing slowing of the lock-in member growth. Whereas for Zeta, we are in a completely different position over here. Their business model is a little bit like Palantir, land and then expand. And right now, they are producing very stable, very predictable kind of revenue and profitability growth across the last couple of quarters. We're expecting them to do the same in 2026. And that's why it makes it a little bit easier for me right now to at least start a position in Zeta Global, especially if they're below $18. Because if you take a look at Zeta right now, you just ignore the PE ratio, because they just turned profitable. It's not really yeah, let me see over here. If you take a look at the P ratio, 91 times PE is really high, definitely. But because they just turned profitable, let's take a look at Zeta. I believe if you look at some other metrics, they might seem a lot better. So if you take a look over here, let's go to financials, ratios, and let's take a look at Zeta. Do they have the PEG ratio over here? No, they do not. Okay, so If you take the EV to sales, their enterprise value to sales, again, because they are a company with more cash than they have debt, just slightly more, not a lot more. Enterprise value around 3.2 times. If you take a look historically, this is more or less where they tend to trade. They're not extremely overvalued. They're not extremely undervalued as well. I would say that they're about fair value. Let me see what's the expectations for growth. What's this? Negative 63%. This can't be right. Let me see. Did they give 2026 guidance? Let me take a look. Okay, for full year 2026, we are increasing revenue guidance to at least $1.7 billion, which include the $190 million from Marigold's enterprise software business and $1.54 billion from Zeta, unchanged from the third quarter 2025. This represents a growth rate of 34% and 20% when excluding political candidate and Marigold revenue. EBITDA at around $385 million, free cash flow 224. No net income. Do they have net income? Okay, I need to dig a little bit deeper for net income because I was thinking of using the PEG ratio. Give me a second. Meanwhile, if anybody has any questions, feel free to leave them over here. Let me go and find, I believe I saw somewhere their EPS growth. This is just the beginning, Bob, but thanks for all your support. I mean, I see all of you, the same few people always talking, and then, yeah, it's good to know that I'm not talking to a blank space and there is some value in what I have to say. So thanks for the support. All right. No, okay. So the reason why I think it's hard to find the EPS growth is because the consensus EPS right now is around 97 cents, I believe. Give me a second. Where did I see the 97 cents? The reason why I can't find a proper growth rate right now, because the full year EPS, although they just turned profitable in Q4 of 2025, the full year EPS in 2025 is negative 14 cents. So because of that, it's actually that's why the growth rates numbers are a little bit off. But basically, they are expecting to come in at around 97 cents of EPS. At least that is the consensus on the street, right? Between 76 cents to $1.20. So I think if they do come in at this number, then right now, even with the 91 times PE, if you look at it on a PEG ratio basis, it does make sense. Because when you take a look, let me see their forward numbers. I'm pretty sure their forward numbers should be fine over here. Zeta's forward PE is around 25 times. Is around 25 times. So if you take a look at the trade desk is around 18 times, but I mean, the trade desk is not doing very well, right? App Loving is around 27 times, right? So yeah, around there. And yeah, everyone else is smaller than that, but that's because their growth rates are a lot slower than what Zeta is putting up. I think I will have to do a full-on video like for Zeta, like what I've done previously for other companies to actually do this a little bit more justice. But I think in terms of valuation, I think if I take a look at the growth rates, I take a look at the fundamental metrics of of Zeta, I feel a lot more comfortable with them compared to Reddit, which is why I've decided to start that position. I'm actually at the point where I'm worried that the 7 cash account puts do not get assigned, so I might preemptively just go and buy some shares on the open market first. Oh, if Zeta gets to $29, I will be very, very happy because I plan to make this a bigger position in the portfolio. Right now, I'm contemplating two things. If I want to have, because I already sold that cash account put on NVIDIA, I'm just wondering whether or not it actually makes sense to hold NVIDIA in this portfolio, seeing how small it is, because it actually lowers my. Okay, let's put it this way. If I'm just out to like purely beat the market, I would just buy NVIDIA and Amazon and make it a large part of the portfolio. And then likely, it is in all likelihood, we will beat the market. But I want to spice things up a little bit, right? I do not want to pick the boring picks like everybody knows NVIDIA. I'm still going to cover NVIDIA, don't get me wrong, because I'm still probably going to hold it in my other portfolio now as I de-risk my bigger portfolio. But at the end of the day, in this public portfolio, I am hoping to demonstrate some of the ways to do fundamental analysis on completely new companies. So one, like I said, one likelihood is I do NVIDIA, Amazon, and I would need to do minimum 100 shares because otherwise I'm not going to hold a position here that I cannot run a real strategy on. Yes, you need to hold NVIDIA to get a margin if you have portfolio margin and you're going to do cover calls on it. Yes, I think the premiums on NVIDIA is very good. So I might do it on my own main portfolio because I think over here, where I can provide the most value is in helping you guys try and break down some of these companies like Zeta. I think with NVIDIA, the coverage is already very extensive. People like Jose that comes on Amit's show regularly, they're a lot more informed than me in the semiconductor space. I can definitely share how I research into the semiconductor space, but I would say that at this moment, I'm not at the same level as Jose when it comes to understanding the semiconductor space. When it comes to finance, when it comes to just purely tech in general, scaling tech businesses, I can understand that. I believe GTC is already happening. If I'm not wrong, it's like 11 p.m. Singapore time. So I basically stole 30, 40 of you away from GTC. I'm so sorry about that. I believe it should already be on. It's 8 a.m. Pacific, if I'm not mistaken, which should be 11 Singapore time. I'm not sure if I'm miscounting that because of the daylight savings, but yes. The problem with that, so the problem with holding 100 Amazon and 100 NVIDIA is that $40,000 will be locked in. Now with $60,000, I'm not sure whether or not, if I'm holding only 4 positions, is that too little? But then again, I'm very picky when I pick stocks for my own portfolio. So on one hand, I'm thinking, that's a little bit too little. But on the other hand, I want to push myself out of the comfort zone a little bit to do research on a little bit more stocks. Like cybersecurity, something I haven't covered. Very interested to go into that. Now, CrowdStrike, I have some puts in I'll probably going to sell some puts on CrowdStrike in my main portfolio. But over here, I want to look at companies like SentinelOne and Rubrik. Thanks for coming here, Samir. I think it's time for most of you to get to work. It is 1 p.m. in the US? Is it 1 p.m. in the US or is it 12? I'm lost with all the daylight savings. A bunch of you here that are either skiving from work or school. I mean, I love it, not complaining, but if you have to go, you have to go. No worries. It is 1 a.m. for me. I'm perfectly fine. Technically, I have a meeting at 9 a.m. tomorrow, so. Yeah, but anyway, at the end of the day, like I said, that's the reason why I decided to choose Zeta over Reddit. On a valuation basis, I can understand it better. The fundamentals, when it comes to the scaled customer growth, a lot stronger than what Reddit is showing. I need to draw that determination between Reddit's locked-in member base as well as their revenue, and then we will go from there. Right. So anyway, with that, like I promised you guys, longer stream. It's been 2 hours. I will spend some time over the next couple of days trying to put together a more comprehensive Zeta and BMNR video to be released over the next couple of days. Yeah. and I'll see you guys on Wednesday. All right, with that, we have come to the end of the stream. Thank you. I will not keep you guys from school, from work, and from whatever else you have to do. Yes, Bob. No problem, Michael. Oh, Michael, I just realized you're in Israel. I mean, I hope you are keeping safe with all the all the conflict that's happening in the Middle East right now. It's a little unpolished, but I feel like it's solid. What, your article on Grab? Yeah, I mean, I just hope everybody is safe over there. There are so many. I mean, yeah, and yes, I hope the stock market will pump. Oh, sure. Why don't you DM me on X? Can you guys DM me on X? Let me see if I have some permissions set up. Have you followed me on X or Instagram? I'll be happy to look at it. Give me a minute. Can't send a DM. I think it might be my permission. So give me a minute. Let me set up. Oh, I'm so sorry. Allow messages request from, and I put no one. Oops. Okay. I have allowed messages from verified users, so you guys can message me now. Change my setting. Yep. And I think that's all. Yep. Okay. Bob and Michael, I've changed my DM settings on X. You guys can follow me again. I'm just gonna share this once more. On X and Instagram, it's Elijah Cheng. So over here. I've changed my thing. I think I had my DM turned to switched off for a while, but I've changed it to verified user, so you guys can message me on X. All right, I am going to go for a short run. Then I have to head to bed because I have to meet somebody at 9 a.m. tomorrow. All right, see you guys tomorrow. Not tomorrow, Wednesday. Technically, it's tomorrow for me because it's already Tuesday, 1 a.m. So it's tomorrow. I'm seeing you guys tomorrow. See you. Stay safe, everybody. Bye.